How many younger investors will leave the stock market because of current correction? It's no secret a lot of young people between 18 to 35 took their first chance in the market in 2020 and 2021. But anyone who has been buying the dip on a lot of popular growth stocks through 2021 are now likely to have lost a lot of money. I think it's rather soon for new investors to already experience their first crash. Lots of individual growth stocks are in crash territory, so that they might already be put off by the stock market. Doesn't help that popular social media gurus like Meet Kevin have consistently advised to buy the dip on stocks that are now crashing. I helped my 15-year-old grandson open a Schwab account with the money he earned over the summer. We opened it on December 30th. He's down 24%. Kid is probably like, f***ing boomer, he boomed me. And when he's retired at 45 with a solid portfolio of broad market index funds that pay him a six-figure salary, he's gonna say, "Thanks Grandpa. Down that much is not broad market funds." One of my favorite quotes: stock market profits are compensation for pain and suffering. First comes pain, then comes money. Andre Costolani. I think most people invest when markets are doing well because there's a lot of hype and news. People are too scared to invest when everything is tanking. So people who start off investing when the market is performing well have yet to go through a correction or crash. So most people starting out probably buy at or near the top. Would assume this quote is pretty spot on. Time in the market. Yep. Every time there is a deep crash, I take out more than I'm comfortable from my bank account and put it into brokerage, and then go on here to decide what to buy. But it's true what they say. My profits from stock picking are pretty much the same as if I went all in VTI. A little less, or a little more. Keep it simple. Putting it all into MSFT now, that would have been a different story. Now you're looking at like 110% over 2 years. But who would do that? Put it all into net now, you 5xx your shit. Put it all into net calls. Now you're retired. Funny you said that. If I took everything I unwisely FOMO'd into over the last year, and of course, had I just bought VTI or VUG, I'd been far better off in the end. Those stupid ARKK funds have lost me a damn bundle. I doubt that I will ever recover those losses. This year, I'm sticking to buying only VGT. I don't care what else happens, I'm not FOMOing into a bunch of garbage anymore. Same here. I fell for the ARK bullshit. It's just better. It will rise forever. The market is just different now. Now, it has come home to roost. Soak it in chode. That's what I tell myself. But in all seriousness, in 2 months SPY is gonna be pushing 80H again. The whole system is just a series of shakeouts that last 2 months and it feels like forever. But in reality it's nothing. I hope you are right. I started in the spring of 2001 and it took me 3 years to see profits after getting slammed for a year and a half, only to lose everything again in 2008. I stayed out of the market after that and finally got back in 2019, made decent gains in almost 3 years only to give about half of those gains back in about 6 weeks' time. If February looks anything like January, I'm pretty much toast. I began investing in January 2020, so I learned my lesson very early on. LMAO same, however, I put even more in after that, lol. Somehow, I don't care what's going on anymore. Just holding. Every past market crash was an opportunity, and every current and future market crash is a risk. Acknowledging this irony goes a long way. The way I see it, this is either a buying opportunity or the economy is going to collapse, and either way spending all your money buying stocks isn't going to hurt you. I began investing in February of 2020. Immediately maxed out my Roth for 2020 and 2021. I'm 26 years old. What's currently happening in the market gets me a little worried, but I'm in it for the long haul, approximately 40-ish more years. Haven't sold anything and don't plan on it. One day, I was in the middle of the desert exhausted from some ultra-hard manual labor, 2009 Iraq. This guy in my platoon came up to me and said, "Blendin Jinto, do you have money? You have to buy now." "What are you talking about? The stock market is absolutely destroyed. If you have money, buy now." I was going through a divorce, and people in my own platoon were spying on me, so I couldn't pull the trigger. My whole life is a bunch of missed opportunities, really. Better to learn these lessons earlier in life than later, especially how to mentally accept volatility. I bought the dip the 10 times already. I still haven't learned anything. Patience, young grasshopper. Need to get a feel for what's really a dip, especially when in a downtrending market. 1 to 2 red days in a broad uptrend can be treated like a dip, but need to understand that the first flash of green during a downtrend doesn't mean trend reversal. We are in a definitive downtrend, and that isn't going to reverse until all of the current uncertainty is lifted. And no, Apple's earnings isn't going to usher a reversal. They won't leave, but they'll realize that they are better off putting most of their money into VOO/VTI rather than betting on speculative stocks that they know nothing about. Yep, you just have to learn your lesson. Better to learn it with a few thousand than when you actually have some serious money. To those who like picking individual stocks, put 5 to 10% of your portfolio into a separate brokerage account to scratch that itch. You don't want to put serious money into something that gets cut 50 to 70%. It's gut-wrenching. I always recommend the same thing. However, that stock picking account has risen to 50% of my portfolio, so this drop has hurt. At the same time, it's a good problem to have. First world problems. The stock market has never been for the impatient. I recall a TikTok couple selling their house in early 2021 and putting it all into equities. I believe their username was 300 to 1 mil or something idiotic like that. They have certainly gone quiet now. A lot of the stock market gurus are also losing views because their picks have plummeted into the Earth's core. We haven't even seen a real crash yet. I started getting into the stock market in 2006, did okay for a couple years, then the crash and some poor moves leading up to it wiped out most of my investments. Moved what was remaining into mutual funds and never really looked at them until the past year, and I started getting interested in the market again. The crash in 2008 definitely left a sour taste in my mouth and made me realize that price movements are well out of my control and it felt like a rigged game. And while I doubt that much has changed, I make safer investments with the majority of the money now. Any advice I have for newcomers is to use these past couple years as learning lessons. Don't believe the hype of a new stock, invest the majority into safer plays and gamble with only a small portion. And I don't consider companies like Tesla a safer play, that's gambling. Companies that have been around for ages and consistently make money, and ETFs or mutual funds and tax advantages accounts. Don't let a bad experience of losing money discourage you from missing out on a decade of gains. Although in my case I just put that money into my mortgage and am happy to have that lower, the gains I would have made in safe stock market returns would have been greater. I've been investing for a few years, but only started investing heavily in beginning of 2021 when I received a little bit from an inheritance. My whole portfolio is just slightly in the red now. Holding and not going anywhere. Stocks will go down, stocks will go up, eventually. That's how it works. Exactly. But remember, it took the S&P like 10 years to recover from 2008. Eventually they go up. It's just a matter of whether or not you need the money in the meantime. Your point is correct, but it only took like 5 years to recover from 2008. Probably no more than the older investors panicking they're about to lose their retirement. I'm 27 and started investing at the end of 2020. I'm down $25,000 out of the $50,000 I put in. I will continue to hold and refuse to sell a company that is doing well but the stock is crashing. Growth stocks might have been overpriced, but if I picked some winners, then it won't fucking matter. 27 with $50,000 to invest already? Mind if I ask how you managed this? What's happening now is a good old-fashioned correction, not a crash. 2008 was a real crash that almost broke our entire financial system. Ask anyone who was trading in 2008, it was a dumpster fire. I survived that crash and the tech bubble by staying the course, selecting companies with real value/earnings and putting cash to work. Buy the dip. It's a harsh lesson, but one that the stock market has been delivering to investors since the dawn of the stock market. If you're at the level of the index, a 10% correction is not too uncommon. It happens every 1.5 to 2 years on average going back to 1920. We have been due for one since 2021 only saw 5 to 6% drawdowns. I'm 18 years old and started investing during the tech bull run in 2020. Invested all my savings in NIO at $11 and couldn't believe my eyes when it hit $66. I thought I was a genius. I sold then at $40 and realized that the market isn't as easy as it seemed. Now I learned my lesson and have transferred all my money into S&P 500. I started trading in 1999. In high school at 18. Believe me, I didn't touch a stock again until 2005, and I had a job and was out of college after losing every dollar I had from summer jobs my first year of college in 2000 to 2001. And then I lost even more in the housing crisis. This correction is just starting. If the Fed decides they want to sacrifice this market to try to stop inflation, it can fall another 20% and really crush what's left of an entire generation, and they'll be gone for 3 to 5 years until they can maybe recover. Somewhat of a similar story to me. 20%? That's conservative. To anyone who doesn't think everything, and I mean everything, can't go to pre-COVID levels, are fooling themselves. I joined in the end of 21, I'm 32. It has not gone well. I believe I joined on the actual end of the bull run. I'm not saying that's when it started correction or crashing, but I noticed profit taking became quicker. There were less lengthy runs. Since then this has only gotten worse. Now, it's in obvious correction. I have lost 20K since joining, constantly trying to adjust strategies and learn. I feel like from November to now, I have gotten quite the crash course in the market. If I can benefit from all the lessons learned thus far, I do not mind the loss. The question is, how much more do I need to learn? There will be plenty of more bull runs.